Built first, then brought down. How an Indian bank ended up in Japanese hands, the full story of Yes Bank. A bank founded by three seasoned veterans, a name that once became synonymous with trust, a place where people lined up just to open an account, a brand that proudly called itself India's New Age Bank. But slowly, the walls of that institution began to crack, its foundation weakened, and eventually, the very bank that was built by Indians has now landed in the lap of a major Japanese company. This is the story of a dream that first rose, then shattered. The story of Yes Bank, its rise and fall, which today stands as a cautionary tale in the Indian banking industry. Today, we will dive deep into this topic. But before we begin, if you are new to our channel, please don't forget to subscribe, so you are always updated with our latest videos. So let's get started without any further delay. It was the year 2003, a time when India was rapidly moving toward private sector banking. While public sector banks had deep roots, the needs of a new generation were changing. In this wave of transformation, three seasoned names came forward: Ashok Kapoor, 𝐟𝐨𝐥𝐥𝐨𝐰, and Rana Kapoor. All three had impressive careers. Ashok Kapoor had served as country head of ABN AMRO Bank, 𝐟𝐨𝐥𝐥𝐿 was associated with Deutsche Bank, and Rana Kapoor was head of corporate finance at 𝐼𝐶𝐻𝐿 Bank. Together, they launched a non-banking financial company in which Dutch lender Rabobank held a 75% stake, while the remaining 25% was owned by them. But their real dream was far bigger: to establish a full-fledged commercial bank. In 2004, when the RBI granted them a banking license, a new chapter began under the name Yes Bank. And then in 2005, the bank went public with its IPO, attracting significant attention from retail investors. At a time when major banks in India were offering 4-5% interest on savings accounts, Yes Bank boldly offered 7%. That daring move immediately struck a chord with the public. Suddenly, people felt there was something unique about this bank, and that uniqueness became the very identity of Yes Bank. Rana Kapoor was appointed as the managing director and CEO, while Ashok Kapoor took charge as chairman. The bank wasted no time, launching gold and silver debit cards for retail customers, introducing attractive loan schemes for the corporate sector, and laying the groundwork for digital banking. Yes Bank surged ahead on every front with innovation and aggressive strategies. By 2008, it had become India's face on the international banking stage. Institutions like Business Today and KPMG declared it the best bank in India. It was a bank embraced by young customers, fast-growing companies, and investors alike, seen as the representative of a new era. But the journey took its first major hit during the 2008 Mumbai attacks, when Ashok Kapoor tragically lost his life while at the Taj Hotel. At the time, no one could foresee how his absence would deeply disturb the balance of Yes Bank. From that point on, the entire command rested in the hands of Rana Kapoor, a leader known for his aggression and ambition, but perhaps not fully prepared for long-term stability. Between 2014 and 2019, Yes Bank began extending loans at an explosive pace, raising concerns among financial experts. In 2014, the bank's total loans stood at 55,633 crore, but by the end of 2019, this figure had surpassed 2.25 lakh crore. In just 5 years, lending had increased more than fourfold. Deposits had also grown, but not in the same proportion. The underlying strategy was clear: rapid growth, rapid profits. But in this chase for scale, loans were extended to corporates already battling financial crisis. In 2015, global financial firm UBS issued a warning in its report that Yes Bank's lending model was highly risky and unsustainable. But at that time, the bank was wrapped in a glamorous veil: grand conferences, prestigious awards, media interviews, and a booming stock market presence. No one could have imagined that behind this glittering image, the foundations were already crumbling. In 2017, the RBI conducted a detailed review of the bank's balance sheet, and that's when the real story of Yes Bank's downfall began to unfold. The report revealed that the bank's actual bad loans were significantly higher than the declared NPAs. Fingers began pointing at Rana Kapoor. In 2018, the RBI directed that he be removed from the post of CEO. Within a month, the chairman and 2 independent directors resigned. The internal structure of the bank began to unravel. By 2019, the situation worsened to the point where Rana Kapoor had to sell his own shares for just 142 crore. Panic spread throughout the banking ecosystem. Customers rushed to withdraw their deposits. ATMs started running dry, long queues formed outside branches. Yes Bank was now staring at the brink of a full-fledged bank run. Then came March 2020, when the RBI stepped in with strict measures. On 5th March, it imposed a 30-day moratorium on the bank. Account holders were restricted to withdrawing only 50,000. Chaos spread across the country. To stabilize the situation, the RBI appointed Prashant Kumar, the then Deputy MD of SBI, as the administrator of Yes Bank. Along with SBI, 7 major Indian banks stepped in to invest in Yes Bank and began efforts to revive it. Gradually, the situation came under control. By 2022, Yes Bank offloaded 48,000 crore worth of bad loans to J.C. Flowers ARC, making it the largest NPA transfer deal in Indian banking history. Yes Bank acquired a 9.9% stake in J.C. Flowers and now plans to increase it to 19.99%. Another major shift occurred in the bank's lending strategy. Earlier, over 60% of loans were issued to large corporates, but by 2024, 62% of Yes Bank's loans were directed toward the retail and SME sectors. SMEs are considered more stable and less likely to default, making this transition critical for the bank's long-term strength. Then, at the beginning of 2025, a new chapter unfolded. Yes Bank was no longer Indian-owned. Japan's Sumitomo Mitsui Banking Corporation, SMBC, acquired a 20% stake in Yes Bank, purchasing 13.19% from SBI and 6.81% from other banks. The total deal value was approximately 13,483 crore, making SMBC the largest shareholder of Yes Bank today. SMBC's parent company, SMFG, Sumitomo Mitsui Financial Group, holds assets worth over $2 trillion, and it is listed on both the Tokyo and New York stock exchanges. Its president, Akihiro Fukutomo, now plans to bring SMBC's technical efficiency and deep banking expertise into its collaboration with Yes Bank. This is SMBC's largest investment in India to date, and it signals that Japan is now taking India's banking sector very seriously. But this takeover is more than just a shift in ownership, it marks a profound transformation. A bank that once symbolized Indian identity and ambition is now owned by a Japanese multinational. It serves as a powerful reflection and a lesson on how excessive greed, reckless speed, and poor decisions can drag even the most successful institutions into crisis. The story of Yes Bank is a mirror for India's banking history, clearly showing us how crucial it is to balance professional success with ethical responsibility. It's a timeless lesson for every young banking professional chasing rapid success, often at the cost of foundational stability.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, Subscribe to the channel and press the bell icon so that you stay connected with every news story. Thank you. GRT Business YouTube channel sources news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.